Russia is apparently temporarily limiting the flow of enriched uranium to the U.S. This is because the U.S. has put limits on importing Russian uranium. The move has shocked the world's energy markets and put the U.S.'s nuclear power supply at risk as the price of uranium rises. Russia owns 44% of the world's production and 35% of the nuclear fuel that the U.S. buys. As pressures in the world's politics rise, the United States faces a huge task to secure its energy future or risk a catastrophic power shortage. U.S. nuclear fuel sellers need to be sure that Russia won't keep flooding the market with cheap uranium. The U.S. nuclear industry is ready to move away from Russian uranium. The U.S. law was passed as part of a larger set of penalties against Russia for its attack of Ukraine. Under this rule, the U.S. limited Russia's ability to import uranium from 2024 to 2027. In 2028, the U.S. planned to completely ban all uranium imports. The Russian government said that the bans cover both goods sent to the U.S. and businesses listed in the U.S. This event is very important because it happened because Washington was getting more worried that Russia would use uranium for weapons. About 40% of the world's uranium processing market is controlled by Russia, which also provides 14% of the U.S.'s uranium. For the sake of national security, the U.S. nuclear fuel business needs to build up Western fuel capacity. Russia controls about 44% of the world's uranium processing capacity for the U.S., making it the biggest player in the nuclear market. There is a lot at stake because about 35% of the nuclear fuel that the United States buys comes from Russia. Just in 2023, 27% of the processing services that U.S. utilities bought came from Russia. When Russia made its news, the market reacted right away. Bids for uranium for delivery in November 2025 went from $4 to $84 a pound, which is a huge increase. The news also changed the weekly spot price of uranium, which had been going down. But the most recent events are likely to change this trend. After the news came out, shares of uranium mining companies went up a lot. This was because investors thought that there would be more demand for uranium from places other than Russia, which would lead to higher prices. CEO of Sprout Asset Management John Champaglia thinks that 100 per pound is a very realistic goal for the spot market. In the end, the stock market had a much better day than expected. Instead of falling 0.5%, it gained a small 2%. Uranium companies like Boss Energy and Paladin Energy, as well as Wall Street, Woolworths, NAB, and Resolute Mining, did the best. Finally, Russia's limits on uranium exports have sent shockwaves through the world's energy markets, putting the U.S.'s nuclear power supply at risk and driving up the price of uranium. Getting new uranium sources is very hard for the energy sector, and things are even worse for the enrichment and conversion parts of the fuel cycle. Urano, a British, Dutch, and German company based in New Mexico, runs the only commercial uranium enrichment plant in the U.S. Last year, the company revealed plans to expand this facility. Urano, a French company that makes nuclear fuel, has also joined the race. In September, it said it might start processing uranium at a new plant in the U.S. in the early 2030s. But these changes might not be enough to fully make up for the possible loss of Russian goods soon. The U.S. Department of Energy can let Russia bring in uranium without a permit until 2027. This could help with supply problems right away. At least 2 waivers have already been given out. One went to Centrus, a U.S. company that enriches uranium, and the other went to Constellation, the largest U.S. nuclear plant provider. In 2024 and 2025, these waivers let an unknown amount of enriched Russian uranium come into the country. This uranium standoff has economic and political effects that go beyond the energy sector. It is another sign that trade relations between the U.S. and Russia are getting worse. There is now even more unpredictability in the global supply chain for nuclear fuel, which was already under a lot of stress from other issues. There are worries that this move could lead to more retaliation actions in other areas. The U.S. government is also keeping a close eye on things to make sure that bans aren't being broken. Reports say that officials are looking into whether China is buying enriched uranium from Russia and sending its own production to the U.S., which could be a way to get around the ban on Russian imports. That effect goes beyond the U.S. Other countries that depend on Russian uranium may have to rethink their energy and supply lines. This could change the global nuclear fuel market in a bigger way, with new trade and allies forming. The political situation may also affect how we handle this problem, since President-elect Trump wants Chris Wright to lead the Department of Energy. Wright, the CEO of Liberty Energy, doesn't believe what most climate scientists say about the planet and has pushed hard for more fossil fuel production. The uranium disagreement between the US and China shows how difficult it is to mix energy security with global concerns. The US wants to become less reliant on Russian energy sources, while making sure it has a steady supply of nuclear fuel for its power plants. This balancing act is made even more difficult by the fact that contracts for nuclear fuel are long-term, and the process of enriching uranium for the nuclear energy business is very specific. As an option to Russian supplies, aggressive countries like Kazakhstan, Australia, and Canada may see more interest in their uranium resources. This could lead to new investments in uranium mine and processing centers in these countries. In the long run, this could change the way uranium is supplied around the world. As countries try to protect their supply lines for essential materials, there is a growing trend of resource nationalism and economic separation between major powers. The uranium debate is one example of this. Because of this, there may be more export bans and other forms of retaliation in many areas, including the financial markets. There will probably be more instability and investor interest in the uranium industry. As the market gets used to the new situation, prices for uranium mining stocks, nuclear technology companies, and ETFs that track those companies may change a lot. China is getting ready for President Donald Trump to come back, and some experts think that Trump's plan to put a 60% tax on Chinese goods could backfire and make friends lean towards Beijing. This risky bet could force Beijing's leaders to rethink their plans and put more attention on the economy. This change in focus could be the push China needs to stop relying on cheap exports and huge infrastructure investments. Instead, it might choose to boost internal consumption to make up for the loss of exports to the US. China can't do much to fight back against US taxes because it needs American agriculture goods and advanced technology. China buys a lot of food from other countries, like corn and peanuts, and computer chips from Nvidia and Intel, especially Qualcomm, because China can't make them itself. China might not be able to effectively fight Trump's tariffs without hurting its own economy too much because it depends so much on US goods. Trump's tough attitude on taxes could make it harder to separate the economies of the US and Western Europe from those of China. But Beijing might be able to improve its relationships with Asian and European countries, especially with US friends like the UK, France, and Germany. Should Trump make EU and NATO countries angry, it might be easier for Germany, France, Italy, or the UK to deal more with China. This could help balance things out in a way. Trump's planned taxes on Chinese goods will have a big bad effect on American shoppers because they will cause prices for many goods to go up. The National Retail Federation says that a 60% tax on all Chinese goods could make U.S. customers less able to spend between $46 billion and $78 billion a year. This could happen with everything from toys and clothes to electronics and trip items. Retailers depend on importing a lot of goods and parts for making other goods, so they can offer a wide range of goods at low prices. Taiwan is a big problem in the relationship between the U.S. and China, which makes trade tensions even more complicated. China sees Taiwan as a region that has gone its own way, and it has promised to take it back by force if necessary. Under the Taiwan Relations Act, the U.S. is legally obligated to help Taiwan defend itself. However, it is unclear how much the U.S. will involve itself militarily under Trump's president. A possible Chinese attack of Taiwan would be terrible for the economy because it would slam into the world economy. If tariffs get worse, farm products and market share in China are also at risk. Even though U.S. agriculture exports have been going down since 2018, China is still the biggest market for U.S. agricultural goods. However, Beijing has been working hard to expand its food sources and increase internal production in order to make sure there is enough food for everyone. The American tech industry is getting ready for the effects of Trump's suggested taxes while he was president. Popular consumer goods like smartphones, computers, tablets, and game systems were exempted because of efforts by the tech industry. However, a 60% tax would be 4 times more difficult to deal with than the last set of duties. A new study by the Consumer Technology Association, CTA, paints a bleak picture. It says that the prices of laptops, game consoles, and smartphones could all go up by as much as 26%. U.S. companies could miss out on growing chances in the huge and profitable Chinese market if they try to get along with China. The Chinese government can now go after American businesses in both the US and China with a wider range of tools. They can put in place counter tariffs, stop buying farm goods, and make it harder to get rare earth materials, which are important for making many technologies. China could also make it hard for the US to get to Taiwan, which would mess up the world supply chain for semiconductors. When doing business with China, trade relationship experts stress how important it is to have a plan and use good diplomatic skills. A senior fellow at the Peterson Institute for International Economics named Mary Lovely says that the U.S. should be clear about its trade strategy with China and change its taxes to match that strategy. The main goal should be to do what's best for the U.S. in the long term. This could mean supporting efforts to reduce carbon emissions, pushing for higher labor standards in other manufacturing hubs, and negotiating trade deals to stop China from unfair practices and upholding its WTO commitments. The Vice President of International Trade at the Consumer Technology Association, Ed Bitwa, says that the U.S. should try to make trade deals with China that hold it to its WTO obligations. He does say, though, that it looks like the U.S. has given up on the WTO case settlement process because China doesn't fit in with the WTO. It's possible that Trump's planned taxes will have many unexpected effects that could hurt the U.S. in the long run. Lying to Americans about how much taxes really cost and starting a tit-for-tat trade war could be very bad for both countries. If Trump makes trade issues between the U.S. and China worse, it could have effects all over the U.S., including making it harder to get the best technology on the market right now, which would lower growth across all industries. Tariffs on goods from China have probably hurt small tech companies that don't have many chances to grow the most so far. To move forward, there needs to be a careful mix between being firm and being diplomatic. The goal is to protect American interests while avoiding a full-scale trade war that would be bad for both countries and the world economy. The new Trump administration needs to carefully think about what might happen if it does something and work towards a more strategic long-term approach to U.S.-China trade relations, putting the health and safety of the American people first while keeping the world stable in a world that is becoming more connected. China's government has been getting ready for the 2020 U.S. election, which Donald Trump won. But by early 2021, there was a crisis, and the Biden government was seen as a temporary one. This made people worry about going back to the Trump age without Trump and about possible attempts to kill him. An article called "China Knew the U.S. Couldn't Escape Trump" was written by a Chinese political professor at Fudan University 3 years ago. It showed how the Chinese people feel about Europe losing its freedom and independence to the U.S. The Chinese don't worry and are sure of how strong their country is. Europe has paid a huge price for the U.S.'s war in Ukraine as a proxy war against Russia. Now the EU is at a turning point with most people wanting things to change. Europe needs to learn from China and start caring about what's best for itself. Most of Europe was shocked when Trump won again. There has never been a time in world history when all 4 major parties running for office in a developing country lost more than half of the vote. Because Joe Biden had such a low popularity rate, Kamala Harris never really had a chance to make up the difference and show people that she deserved to stay in the White House. The U.S. and its partners are under a lot more political stress right now than China. If Donald Trump makes the trade war with China last longer, things will only get worse. Donald Trump promised during his campaign in 2016 to put taxes on goods from China and bring industrial jobs back to the U.S. But even the most optimistic figures show that American businesses and consumers paid for 92% of the taxes that were put on China. Now, CNBC and other news sites are saying that Trump's planned taxes might make prices go up for customers and make them spend less instead of learning from their mistakes. He now wants to put 60% taxes on all goods from China. This would be terrible for the U.S. economy and send prices through the roof. This is strange because higher prices and inflation were a big reason why Harris lost his job.